Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. We've just had a big week in the markets. We're going to go through the different major pairs, and we're going to just talk about process. We're going to talk about the big picture, the day count. Again, received a lot of questions and a lot of excellent questions, a lot of excellent feedback, a lot of excellent progress for traders. Some traders have had a difficult week. So hopefully this will help clarify the big picture and coming back to understanding about the triggering of false breakouts, failed breakouts, and the day count. Because at the end of the day, the market is designed to take the money from the many and transfer it to the few. So one of the things about day trading is that we focus on smaller time frames. I talk about taking certain trade setups, which I've put in the playbook as best trade setups, which are designed as explosive or capitulation style moves, which are designed to blow off, either blow off long, blow off short, and then take the money and lock it in and get off the screen. And when those trade setups are there, certain trade setups are scalable, meaning that you can add positions in and lock in major profits. And then there are other days where you're just going to be in, maybe a day two. You're looking at a session scalp, whatever that is. So hopefully this will glue the bigger picture together in the playbook. We'll go through each major pair. We'll talk about the week, the template, and then understanding how to step back. Because a lot of traders are still chasing the momentum style of pushes and moves inside of the ranges, when the real trade is still setting up until we break out of a high or a low or violate a high and low. So we're looking at the Swiss franc. Our pink line delineates our Monday. I'll type the Monday in there so traders can see this. You can walk through your own charts. So again, talking depending on the session that you're trading, you will either be trading Asia, London, or New York, or some other time in between. And sometimes those in-between times can offer opportunities because the 3-hour window will build order flow depending on where we're at in the template and the week. So we're looking at the Swiss franc. The week opened up on Monday inside of the previous week's high and low. So understand again, we go back and we talk about on page 26, the opening range and the initial bounce. The opening range is Monday. Monday's high-low sets the high-low for the week. And when we're inside, obviously we haven't broken out. And when we haven't broken out, we haven't triggered other time frame traders into the market. So you need to understand what that means. When you're inside of a high and a low, we haven't triggered other time frame traders, daily high and low, weekly high and low, 4-hour, 1 hour, whatever that may be. When we bring those other players into the market, we now, if we've broken out, as market profile Dalton talk about, a market that is out of balance can potentially be an explosive day or a market that will continue in the direction that it's already traded. So when it's out of balance, there's uncertainty. And that's what creates our day count when we break a weekly high or low. That's what, when we get trap volume, that's what starts our new day count. But that is not trap volume until the day is closed. So we have traders who are saying it's a day one, day two, but the week hasn't been violated and the day is not yet closed. So until that day closes and completes, we can't continue a day count. So let's go back to our charts. I see different perspectives on the market, but the number one thing to understand is that my approach is that it gives me a regimented process because I can see where the money is being made. I know where the money is being made, and I know how I make my money, and that's where I will look to position myself into the market. And I have to reinforce this perspective that the more you do this, if you've been getting burnt, especially in this particular week, we had 3 days of major red news. If you're trading inside of highs and lows and you're inside of daily highs and lows, understand that you are inside. When we break outside, then we can begin our day count. First green day on the Swiss franc. Monday was inside. It broke the low of Friday. So we have shorts day one shorts in the market. Okay, so coming back to, okay, well, what about Monday? Because I talked about 3 different types of setups. We have 3-day setups. We have opening range initial balance setups. That's the new week, the new template, and we have day 3 breakout setups. So we can build our thesis with first green day, first red day, our parabolic trend trades, our parabolic short squeezes, our parabolic reversal trades out of those setups. So if you piece this together, you'll understand about the game sometimes is about sitting on your hands or scalping in the session that you're trading and waiting for the bigger template to set up. We talked about this at the beginning of the week, and we talked about this during the week because traders were getting chopped up, chasing moves, chasing, first bounce. There was no first bounce. And then when there was a first bounce, they didn't take it because they'd been burnt. And this is all the things that if you sit down and learn from those lessons and listen to what I'm trying to get through today, you will be patient because you'll understand that when it's easy and set up properly, there's no stress and you can add in and the market will hand you a little plate of money and say, there you go. Like Jim Rogers said, when it's laying over in the corner on the floor, all you got to do is walk over, pick it up and put it in your bag and leave the room. That's how you need to start approaching the market, not getting in at the high because it's at the high. You might be in a day 2 on the front side of a move. So if we look at the Swiss franc, again, Monday broke down, went to the low of the week. When they break the low of the week and pull back on major red news and give us our first green day, guess what? Somebody's trapped down low. Somebody is triggered on a breakout short. They might have even been shorting it in London, because the trend is down. I heard this today. Somebody said, well, my thesis was the trend was down. But you're outside of the range. And we'll talk about that in a sec. That was on gold. So, first green day, that's no longs, though, are in the market. Remember what I said yesterday. This is our first green day. People start the day count here, and it's day 1. They go day 1 longs. That is not day 1 longs. Okay, we have a first green day, but notice we haven't broken any daily level highs. There are no breakout traders in the market until Wednesday. They trigger the high of Tuesday. Day 1 longs are in the market. They break down. They trigger the longs first, then they stop hunt into them, put a low in place, and go vertical. In the U.S. session on news, they take you up into the high on the news. So they start the move prior and take you up into the high on the news. Whipsaw U.S. session traders, creeping trend down 3 levels of drop into the low that was made in the gap time in London and go vertical and trigger the high. They trigger breakouts, day 2, without letting them stay in the money. The market closes as an up day, but breakout traders are still in negative equity until the Asian session opens. Day 1, breakouts. Day 2, breakouts. Day 3 blows off in the direction of the trend. Okay, and some traders nailed this today. I didn't even look at the U.S. pairs today. I was kind of pretty much tunnel visioned on gold. But we had day 3 longs in the market that took out the high of the week from the previous week. 3 levels of rise. We'll look at the smaller time frame in a second, which gave traders an excellent high of the week, high of the month, high of the day. 3 levels of rise, shorting opportunity in the U.S. session, heading into the U.S. session right in the gap time. And again, I've talked about this in the playbook. Currencies can move at 7 a.m. So I repeat, currencies can move at 7 a.m. Now, I again did not trade any of the U.S. pairs today, but we broke out at the high of the week. And the number one thing to remember today, on this day, is that there was no major red news. What that means, and I repeat this, when there is no major red news, and we have a market that's gone vertical, 1, 2, 3 levels of rise, and broken out at the high of the week, the high of the month, and we've broken down in the gap, okay? 1 push, 2 push, 3 push, break in structure, consolidation. The market is already on the backside of the move. our universal 5-minute entry criteria is already met right at the open of the session. There's no major red news. Trade the market as per normal, as it is set up. As soon as it breaks down, you can add into this market. It is not coming back. All of this volume is trapped above the breakout level. Above the breakout level. So guess what? On Monday, this will be our day one, and it will close as a first red day. So again, the process, if you just follow the process and wait patiently, we get chopped up in certain trades during the week, but this is an easy, low stress trade opportunity for the breakdown, the collapse on the backside of the move heading into the US window for an easy, low stress 50 pips, which several traders took today right at the beginning of the US session. And I know a couple in particular that added in with size and had experienced some smaller losses early in the week and blew out those losses and had major profits. And again, coming back to stepping back and understanding the bigger picture and knowing when it's easy to make money. And you'll notice again, this is a Friday. Friday, easy money was made. They chop people up during the week. They bust their accounts. They bank rob them basically. And then at the end of the week, they give you the easy trade, but you're so beaten up from trying to trade the chop and the whipsawing and everything else that you don't add into size. You trade this with 1% risk when this is the all-in size trade to add in and rake in the profits. So Japanese yen, again, we were front side. We had a breakout market. So again, a market that was still front side. We had major red news 3 days in a row, and we had bodies that were staying inside of that front side. We got to yesterday, we broke structure, and there's one, I pointed out to one trader, we didn't break down. We've only gone sideways into consolidation. We had day one breakouts on Tuesday, day two on Wednesday. Day three broke structure, but they didn't break any lows, and they went vertical today on Friday outside of the range. So remember what I talk about that starts our day count, the failed breakout. We have a breakout. We have a breakout on Wednesday. We have a false break, but it doesn't break down. We have a failed breakout up top on Friday. Now, we haven't taken out the low of the day. It's not a first red day or anything, but we could potentially have a large mover on Monday on the Japanese yen that breaks down and takes out Thursday's low. No idea. We've broken the front side of that move. We've dropped off the peak formation high with trap volume on a failed breakout. We'll see what happens on Monday. Canadian dollar, we took out the low of the week and again trap volume down low. Whipsaw, major red news. Trap volume below the low of the week. That starts our day count. Day one, but no trap volume up top. Day two, that triggered our, we had day one breakouts on Tuesday, but no volume trapped. But that triggers our initial breakout, our thesis, day one, day two. Day three goes vertical at the US session. Day three longs in the market, but you can see now the difference between triggering a breakout versus having volume trading. And then our target obviously is the high of the week. They go vertical. And on our Friday, go outside of the weekly range and trap volume up high. Again, this market could still be on the front side of this move. No idea. But if it breaks down, our first target will obviously be the low of the day from Friday and potentially the low of Thursday as we have breakout traders in the market. But no idea. Doesn't matter what I think. It matters what happens when I come to the screen in the session that I'm trading. Again, we were on front side. We've broken that. 3 levels of rise with the collapse. And again, congratulations to the traders that nailed this trade today. So we talked about this early in the week. We had day one opening range. So again, understanding an opening range and a failed breakout. So they breakout traders are in the market on Tuesday. That breakout failed on Wednesday. That it was a first red day, and that gave traders the shorting opportunity into the low of the week. Typically, a first red day, we will look for that opportunity, the pump, first red day up high for a larger move down, but it doesn't matter because we were headed towards the low of the week. Trigger false breakouts at the high of the week, trade back down to the low of the week. So again, in the session that you're trading, if you're targeting the money, if you're going short, you need the pump for the dump. Now, some of these trades came later in the session, same with the indexes. So identifying the best target, this was a first bounce trade on major red news. Today we're outside of the range at the low of the week. This formed a nice short squeeze opportunity heading into the U.S. window. Once that short squeeze presents from outside of the range at the low of the week, DNC, do not counter trend. Euro, we talked about this earlier. We talked about the opening range failed breakout. We can call it a failed breakout, opening range trade, a reset. It doesn't matter. The trade setups are still the same because it's low-hanging fruit. And we're targeting the low of the week. And again, with the major red news, the only option we had was first bounce. And again, depending on which instrument you chose to trade, there was the pound, the euro, gold, Aussie dollar. But we had the breakout of the low of the week. We have volume outside of the range on our low of the week, low of the month for the reversal trade opportunity in the U.S. session. So understand, remember, when we're outside of those weekly ranges, weekly lows, and we have the market dumping down in the Asian and then London windows, and they reverse it, target, if your breakout fails, our target potentially is always going to be the opposite side extreme. So Monday morning, we could see Asia pop up or London pop up for the trade back up to the high of the day from Thursday. No idea. We'll see what happens when we get there. But this market now has locked in a day one count. We could see day one, day two. This whole area could still revisit the lows, but we want to target the money if that setup presents. Oil, I've been waiting for this to roll over, and I did not trade that today. I was already well on its way to moving and didn't want to trade Asia. Gold offered a nice short squeeze, but this trade I've been waiting. I talked about the break in structure last week on the inside. Traders, talking about the day count and everything else, but step back, look at the big picture, weekly highs, weekly lows, day one, day two, day three to the high. We broke down on our Tuesday. Lower high, lower low. That's the break in structure inside. This is a broken down, weakening market. Understand, a weakening market. A weakening market pumps up, breaks structure, pumps up, and dumps. Trapping traders looking for the counter trend trade on a broken down market. I don't think oil is done here. I think we can still see some further carnage here. We'll see what happens. My opinions don't mean anything. What matters is how it sets up. But this is also, some traders nailed this today in London. Oil, when this starts to run, you definitely do not want to try and counter trend that market. Tunnel visioned instrument. I love gold. I don't know why, but sometimes I need to avoid it because it's very, very, you got to wait. But other times I love it because it delivers and it's predictable. And, if one instrument guarantees that nobody gets a free lunch, it is definitely gold. So coming back, we have come off, we went back, we talked about the daily charts going up 1,000 pips in January, and we talked about the opening range and initial balance for the 2 months. We took out the low of January, but we had day one, opening range. Day two, volatile instrument potentially reset. We broke down in Asia on Wednesday. So now we have a market that's week one, week two, week three on the run. We were in consolidation after a large breakout on Wednesday. And then Thursday, we again, major red news. We trade between the high and low breakout, lower low for the pump up. This higher high today, on Thursday, was the sort of dead giveaway that I thought we might be looking at a nice setup today. We dumped down and broke outside of the low of the month, the low of the year, the low of the week, and the low of the day. So that's our potential huge opportunity for a short squeeze because we have volume now trapped outside on a Friday, no major red news. This set up perfectly for a dump and pump short squeeze, triple bottom in London. And the pin hammer after the New York Open heading into the third hour for an explosive vertical parabolic move, and this was a great trade. Several traders held on to this for the maximum amount out of this trade, and obviously again targeting the high of Thursday. So we haven't hit that yet. Asia on Monday most likely will clear that out, maybe on a gap. But this gave a huge return for traders. This is a 150 pip move, 3 levels of rise, 50, 50, and 50. Maximum positions were taken off pretty much as soon as we took out that third level, and then left a small trailer in. I still think we could see a retest of the low of the month, because we could see a day 1, day 2, day 3 type of scenario. No idea, it doesn't matter. But this was an absolute gift today. Again, understanding that we had a nice parabolic move on day 3 coming out of that opening range initial balance setup and major red news 3 days in a row. We took out the low of the week, no major red news. This is a short squeeze parabolic move. Some traders were shorting this down because they said the trend was down. Once we're outside of the low of the week and there's no major red news, we have volume getting trapped. That is different than on day 3 when we broke out. So we had a breakout on day 3. Traders were looking for the reversal on Wednesday, but we went into consolidation. So notice and study the difference between these templates. We're in a 100 pip box between 75 and 25. We're in consolidation as opposed to putting in a 3 peak reversal formation for the short squeeze. No major red news on the calendar. Volume trap. That now begins our day count, first green day, and our day 1 heading in on Monday. So, again, the patience to sit back and wait and just remember, print off what these big moves look like, and then ask yourself every time you're about to take a trade, are you in a best trade setup scenario? So if we come back and just look, we had day 1, day 2, day 3 on Wednesday. Now we have Wednesday, Thursday, Friday. Day 1, day 2, day 3. Another 3-day setup. So we may just take out Thursday's high and roll over. I have no idea. But these 3-day cycles are continuous. We have day 3 breakouts. We have 3-day cycles. We have opening range and initial balance. Step back, identify the best trade setup for yourself in the session that you're trading, and understand, is that a scalp or is it a sizable opportunity? When this market reverses from a low of day, low of week, low of year, low of month reversal, DNC, it is not coming back. So I'll repeat this. There are certain setups on a Friday, especially heading into the new week, and you'll notice that this market closed at the extreme. Do not try to counter trend this market. So the Euro Yen, we broke out at the low of the week at the end of last week, and that was a breakout of its low of the week, and that formed our day count heading into the new week. So that began our day 1. Monday was day 2, and this is an example of a Friday's our day 1, but Monday's in a breakout, and we talked about don't counter trend a day 1 runner. So that gives us our new week, but sometimes in our new week, we have to stick to our opening range because the market's obviously in breakout. It's taken out that lower high, and we can start our day count, but we have an opening range breakout now. Monday's our opening range. They break out on Tuesday, day 2, day 3. So traders were looking for the day 3 breakouts up top, but now if we just go to our opening range, we have, for the new week, the new template, day 1, day 2, we have this equal highs. Equal highs, that is definitely not a peak formation. It didn't quite break down. Traders were looking for this on Thursday. Major red news again, but there's no break in structure. So important to understand, you can look for this. Yeah, we have day 3 breakouts. There's no break in structure. All this market did was go into consolidation outside of the breakout. This breakdown broke our low of the day and potentially now gave us a break in structure for at least a trade back to the low of the day. And as we posted on the community page, we had a breakout in London, and we had higher lows, higher highs that broke structure on the inside, lower low, and we had our M top. This breakdown, when I first observed it, I thought we would maybe test that low of the gap and pump up for a move back down. We didn't get that. It broke down even further and into the U.S. window. So this breakdown further did not eventuate into a pump and dump. I know some traders took this as a trade setup, but if we go and look at our 5-minute chart, even our 15-minute, we went down first and put a low in place. This engulfment vetoed that trade setup. I know some traders were shorting into this. So I'll just talk about that because the market should have went up and auctioned up into the breakdown, broken structure. Could have been 30 minutes, could have been 35, could have been an hour, and then broken down again. But it put a low in place first, and that vetoed it because now we're shorting down into the low of the day, which was also the breakout of the Asian session. So difference between a dump and pump for the move back towards the short trade in the gap time versus a pump up. This market could have broke the low of London and pumped up to the previous day's high and failed. It didn't do that. So let me just repeat this. If you got caught shorting this, you still had plenty of time to get out of this trade. So reinforcing that even if you were wrong, you still had plenty of time. There's a good 30 minutes there to get out of this trade at break even, maybe with a small profit or even a tiny loss. This is not the pump and dump. They went down into the low and locked in the low first. This should have not come down. It should have broken and then pumped up into the open of the window for the move back down. We did not get that. The S&P and the other indexes were very similar. If we'll move in a bit closer. We had Friday and then day one Monday. Day two, again, major red news. Market pumped back up on day three and took out the high of the day in the Asia-London window before breaking down into our U.S. session open. This taking out of the low of the day on the inside on day three is a break in structure. Now, again, this is an example of a market that broke down late in the day and continued to auction down and take traders into the low of the week into the open of the U.S. session. So, again, we had no major red news today. A lot of volatility. We're down low. No ideal best trade setup whatsoever as compared to the U.S., Swiss franc, Canadian dollar, and gold. So I had zero interest in these markets today. Again, I don't trade late in the session. I know some traders trade the afternoon session in the U.S. session. But again, coming back, day count, day one, pump day. Day two, major red news, volatility. Day three, inside day. So notice the inside day. Day one, day two, inside day. Trigger the false break on the inside day. Where is the money? They're caught long. Where is the money? That's a break in structure on the inside. They pump it up and dump it down at the end of the day. Take traders down into the low of the week. Trap them down low before reversing later in the day and closing up high. No idea what this market's going to do. I'm quite bearish, but who knows? The indexes can keep defying all logic. But my whole intent with this video today is to reinforce the understanding of stepping back, knowing where the weekly levels are, and then forming your thesis based on that. We had major red news, so that prevented us, two things, from potentially sizing in if we didn't get the first bounce explosive move. But number two, just taking an easy scalp or trade setup that was in line with the thesis of the day count and the template, and then being patient, understanding we had no major red news on Friday, and then hunting the best pair, the best instrument that potentially could have given us an easy trade setup. Now, I thought the yen crosses might break down. Neither pair gave an entry. The pound yen did not break structure. Again, we need the breakdown for the pump and dump. We had a first red day on pound yen. It has not eventuated. Those two pairs may still play out next week. So keep your eyes peeled. Often we'll lose sight of following a pair that doesn't trade out on the day that we expect, and we miss the bigger move later on. Gold today gave a huge explosive move. Again, next week we could have some massive trade setups, but step back, look at the bigger picture, understand when you're outside of a weekly high and low and there's trap volume. Not just that it's broken a daily high and low and I'm going to sell it, I'm going to buy it. Look for trap volume, know what day count you're in, know what your big picture thesis is, and then identify the best instrument that has the best trade setup in the session that you're trading. Lock it in. Don't keep trading. Don't give it back. Get off the screen and rinse and repeat. Congratulations, traders. This was a huge week. Several traders, probably some of their biggest weeks ever. Other traders I know experienced some difficult and challenging days, but learn from those lessons. You can turn that into gold. Turn it into gold. Keep getting better, 1% better every single day, and may the markets go with you.